Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan,
And Anthony?
and we're going to look at the health of the consumer and if this is leading to a possible consumer-driven recession. Consumer-driven recession? Recession? I don't know. Not good. We're going to look at not good stuff. Maybe bad stuff. Could be bad. We're not sure.
Scary.
Yeah, a little scary. So we're gonna do this kind of fast, and then I also looked at the previous times the Qs have dipped under the 200 and how it behaved. So I have like the last 6 or 5 that we're gonna look at because there's a pattern. Heads up.
Yeah.
So this is pretty interesting. So this is on student loans. Okay. So basically, in March, 6 months after the pause ended, because Biden put a pause, so there's no interest gain, all that stuff. 20 million people were making payments. 19 million were not. So about half, were just either in delinquent, default, or on pause. Okay.
Yeah. That's
Now,
bananas.
some of those people could be in school. There's not, it's not strictly 50% people are not making payments. There's a
Required
little bit of a
payments.
caveat here.
Yeah.
But
Some people still have zero payments because of the save plan
yeah,
still hanging
exactly.
around, kind of.
So not good, but more importantly, what I want to show is what is the actual payment. Now, this is just for the people making payments, okay? Not the
Yeah.
people not making payments. So how much per month? 200, all the way up to 1,000 above. So just under 5% of people, a decent amount, 10%. This is kind of a lot. You're one in 10 of your people making. This is a car payment right here. Actually, that's more than a car payment. Never mind. Let me take that back. This is a car payment. This is a lot. This is anywhere between 500 and 1,000. 10% of people, 11% of people are making that payment every single month for school.
You know, the scary thing about this, too, is
Eesh.
that student loans, unlike other types of debt, the payment doesn't necessarily have to have a fixed amortization where it'll be paid off at the end of the term.
Oh, it's a
Some of
scam.
these are negative amortization
Yep.
loans. Yeah.
It's horrible.
So
It's
payments are
gross.
artificially low.
Yeah. I am in the team of we need to fix this, not erase it. Very clear. That's not realistic, but fix it. Less predatory.
Yeah.
Now
Definitely
let's look at
fix.
definitely fix. Let me look at some other things. We're gonna get to some charts here, but the average household's monthly expenses are 6,440 for per month, 77K per year. Okay, that's up 6K, almost 10% from 2022. The
Wow.
average annual income after taxes is, let's just call this an 88 and an 83. So you have your expenses outpacing what you're earning. Not great. On top of that, you have your largest average cost, your rent or mortgage being 33% of typical spending.
Yeah.
That's about ish. That's pretty high, but it's not the
Yeah.
worst. Groceries are a large chunk of this.
Hmm. Okay.
Yeah.
That's
Eggs.
pretty crazy. I think you have to have like $80,000 a year for a household just to run now.
Yeah, and that's not saving a lot, right? Because there's taxes, there's a bunch of other stuff there. There's so many people have a car payment of like over $800. It's terrifying. It's
Yeah.
absolutely terrifying. This is kind of a breakdown. This is for 2023, but you can see food $10,000, and so there was a lot of other sources that were up to 11 to 12K as of
Yeah.
2025. So they weren't super reliable because they were only using a couple months of data. So I didn't want to put it in here because I wanted this to be averaged out. But if that ends up being true, add another 3K to this. That's not good. That's
Yeah.
very, very bad. That is going to be a problem. So this, you're going to be like, why are we looking at DoorDash?
I mean,
This is what we
it's
call a
the
bubble.
answer.
All right. Essentially, DoorDash is allowing you to do non-interest payments on your food delivery. And I like how up to here it's like, don't expect to pay for a taco. You have to do at least $35. That's not that much money. $35
Yeah.
is not that. That's so you order pizza, you can pay it off in 4 interest-free payments.
I mean, I
Ooh,
always am an advocate for very easy payments for my pizza. I don't know
That's
about you. But
this is going to target people who are not good with credit cards, who don't have the best financial education, and it's going to
Mhm.
cause so many bankruptcies, credit debt. This is a horrible idea. I can't. What?
I remember reading something like that too, that approximately like 30% of people that sign up for these for interest-free payments actually don't end up fulfilling the terms of that, and then it goes into an interest-bearing like
Yeah.
account effectively, or interest,
Well,
accruing account.
I mean, they're hoping for that, right? That's how they make cash. It's like,
Yeah.
but once we start doing this, this is, in my opinion, this is a bubble, right?
Mm.
This is 100% a bubble. If you guys know this scene, this is Steve Carell walking out of that meeting. He's like, hey, there's a bubble. Short
Yep.
everything. What does he say?
Yep.
Short every
Yeah.
fucking thing.
Sure, everything, especially things that that guy touched.
Yeah. This is Vinny sent me this. I thought this was hilarious. This is not real, but it's a Chipotle thing where you can see how much you have to pay off, yeah, every month. Like, what the hell?
Chipotle, it's gone up, man. After this 287 payments, though $2.87 payment, I can afford that extra guac, maybe even double meat. I'm just gonna say.
I can't. I'm broke. It's too much money. I'm also way too cheap. And then, of course, you can't talk about the American consumer without throwing in credit cards, right? We are the credit card kings
Yeah.
of debt in America here. And we are now at a 13-year high for delinquencies. So, sweet. Nice. Haven't seen this
Yeah.
since 2012, which was, if people don't remember, at least like in Arizona where I'm at, was a housing crisis. It was so bad. Okay?
Yeah.
This is boiling up to be a problem. Now, let's get to where it matters. Here's the charts. Okay? Ignore these blue lines. These are for me. Well, no, for you guys too, but for me for trading. But essentially, actually, you can really see it. Really, just it just bounces the crap out of that every time. It's
Hmm.
so beautiful. I love it. We are below the 200 moving average. This dashed pink is called your 9 EMA. Not important for investing at all. These are my day trading charts. But as these catch up, you start to have more volatile moves because you can only, with the exception of Tesla on the down end and Nvidia on the up end, you can only stay so far away from these for so long, right?
Okay.
So this is what's happening now. We're consolidating around this 480, 490, 470 area. We're going back and forth. Now, usually you have some pretty violent moves. This is 2022 February. So, we can pass back down it. We kind of consolidate a little bit and then violence. Okay? This is pretty fast. Usually when you go down, it's pretty quick. All right?
Yeah. They say take the elevator down to the stairs up in investing.
Exactly. Same thing. Here's your violent move. Okay? It happened 2 months after we initially went below the 200. This is 2018 December. That is disgusting. All right? Let's look at another one. This is 2015. Same thing. This is incredibly violent. I was more talking about this one. This is, another 8% or 6%. This is gross. This is disgusting.
Wow.
So those are the moves that we are looking for. So I'm going to go back to here we are. I'm not saying it's going to happen. I have no idea what's going to happen. I'm not confident like I was when it tanked last time in 2022 to actually short it. Not confident enough. It does not look good to me.
Okay.
It seems rough. Most of the Magnificent Seven stocks or at least the top 10 stocks in the Qs are below the 200 moving average now. And they are butting up against averages and staying down. So unless there's a pretty big shift in sentiment, I just don't see this ending super well. All it takes is another announcement for tariffs, and that's it. Like
Or Jerome Powell say they're not cutting rates at all this year because of tariffs. Maybe that's the one.
Yeah, that could do it. If Jerome Powell says that, that is your generational buying opportunity as after it tanks, not during, after.
Yeah.
But I'm not super confident in the health of the market right now. Anytime I start to see these stupid financing pizza things, it's like this is not going to go well. This
It's
is
gonna end great.
bad.
A couple other points I want to make about the consumer health thing. This is at a time when credit card interest rates over 20%. It's like the highest they've ever been as far as
Mm-hmm.
the average interest rate.
Yep.
Not only balance hitting the highest of all time to over $1 trillion in credit card debt,
It's like
but now
one,
you
two.
also have these counter and afterpays where people will argue that those are like hidden consumer debt that can be to the tune of hundreds of billions of dollars in total. So
Yeah.
yeah, consumers hurting right now. One of the lowest savings rates we've seen in quite a long time. There's not a lot of gas left in the tank, if you will, for the American consumer. And we're getting a sentiment pullback here from both a kind of general economy standpoint and an individual household standpoint. It can really become a self-fulfilling prophecy, and I think we may see that kind of pan out here. But the nice thing is, see our shopping list video. Get your
Yeah, I'll
calculators and
tag it.
pencils ready. You buy the stocks you like when they're at the right price. It's a great time.
Yeah, don't try to time it. It's impossible. I will say Jerome Powell also revised his unemployment rate to higher. And when there's higher unemployment, stocks go down. Big deal. So we'll see what happens. I'm not changing my positions. I'm just hanging out. I might buy more Baba, but that's about it for now. So, all right, guys.
Catch you next one.